Welcome to our channel. If you're a beginner looking to invest in the stock market and you have $1,000 to start with, this video will give you a clear, step-by-step guide. By the end, you'll know exactly how to put your money to work without feeling overwhelmed. Let's get started. Before you jump in, ask yourself, what am I investing for? Is it long-term wealth building, retirement, or just learning how the stock market works? Having clear goals will help you decide whether to take a conservative approach or take on more risk. For most beginners, the best goal is long-term growth. That means holding investments for at least 3 to 5 years, not trying to get rich quick. To invest your $1,000, you'll need a brokerage account. Today, most brokerages, like Robinhood, Fidelity, Charles Schwab, or E-Trade, offer commission-free trading and easy-to-use apps. When choosing a platform, look for no account minimums, low or zero fees, a simple, beginner-friendly interface, and educational resources. Opening an account takes just a few minutes, and once your $1,000 is deposited, you'll be ready to invest. If you're new to investing, the safest way to begin is by buying index funds or ETFs, exchange-traded funds. These funds hold dozens or even hundreds of companies in a single investment, reducing your risk. For example, S&P 500 ETF, like SPY or VOO, gives you exposure to 500 of America's biggest companies. Total Market ETF, like VTI, covers the entire U.S. stock market, including small companies. Dividend ETFs provide steady income along with growth potential. With ETFs, you don't have to pick individual stocks, you're instantly diversified, and history shows that index funds consistently perform well over time. Instead of investing all $1,000 at once, you can spread it out using dollar-cost averaging. This means putting in smaller amounts, say $100 or $200 each week or month. This strategy protects you from bad timing. If prices are high one week and lower the next, you'll average out your costs and reduce risk. If you're curious and want to learn more, you can allocate a small portion, maybe $100 or $200, towards individual companies. Pick businesses you understand, like Apple, Amazon, or Tesla. But here's the golden rule. Never put all your money into a single stock. Keep most of your investment in diversified ETFs and use individual stocks only for learning and experimenting. Many ETFs and stocks pay dividends. Be sure to turn on the dividend reinvestment option in your brokerage account. This way, your dividends automatically buy more shares, compounding your money over time. Remember, successful investing is about patience. A $1,000 investment may not make you rich overnight, but over 10, 20, or 30 years, it can grow significantly thanks to compounding. The stock market has ups and downs, sometimes big ones. Don't panic if your investment drops in value. That's normal. Stay focused on the long term, keep investing regularly, and learn as you go. Read books, watch financial news, and follow trusted channels like this one. The more you learn, the more confident you'll become. Investing your first $1,000 is about building habits, not chasing quick profits. By choosing low-cost index funds, adding a little to individual stocks, reinvesting dividends, and thinking long-term, you'll set yourself on the right path. So, if you're ready to make your money work for you, start today. The earlier you begin, the more time your investments have to grow,